Welcome back. I'm excited to talk about this topic because it keeps coming up. How much of a minimum down payment do you require as a first-time home buyer? We're going to address that. Often people think it's 20% and they think that's what they need to have at a minimum, and it's not true. We're going to get into the details of how to calculate that minimum down payment, whether it makes sense to put 20% or less. Also, we'll discuss CMHC and how that insurance might affect your decision. We've got a lot to talk about, so let's dive in. Well, let's talk about the minimum down payment requirements. In Canada, it really depends on the home purchase price because it's a tiered system. Let me explain. For the first $500,000 of your purchase, you're required to put forth a minimum of a 5% down payment. For the next amount, up to $1.5 million, you're required to put a minimum of 10%. And after $1.5 million, it's a minimum of 20%. So let's use an example to help illustrate how this actually works. Let's say you buy a home for $700,000. The first $500,000 of that $700,000, you're required to put a minimum of 5%. Which is $25,000. For the remaining $200,000 above the $500,000 threshold, you're required a minimum of 10%. So that's $20,000. $25,000 plus $20,000, you have a total of $45,000 minimum down payment required on a $700,000 purchase. Should you wait until you have saved 20%? Or should you buy with less? It really depends on your situation. We should have a one-on-one private conversation about that. Yet, let me speak in generalities here. The pros of waiting until you have 20% is that you have no CMHC insurance fees. I'll get into more detail about what that exactly is, but you'll save upfront costs on that. Secondly, your mortgage payments will be less because you're putting down more. So you'll have less of a mortgage and the payments will be less. Also, you'll have more equity up front in the home. The cons are often that the GTA home market is often crazy. Prices statistically have been rising and continue to keep rising over time. So will the market outpace you in terms of savings? Often that's been the case. People try to save $10,000 but find the house prices have gone up another $25,000, $50,000, for instance, and they're just not able to catch up. That could be a risk. Also, when you're paying rent, it can be hard to save, and there's the risk of not being able to save enough by waiting. And the other factor is you're not building equity in your home because you're not a home buyer yet. So you're not able to enjoy and reap the benefits of putting those monthly payments towards your own home instead of towards rent. And you're also not gaining that big advantage, which is appreciation, right? That's where most people have won over time. Home prices in the GTA have doubled every 10 years over the past 40 years. That trend may continue, and that's money that's not in your pocket. So those are the big pros and cons. So I've spoken about CMHC insurance. Now let's talk about how that works. That insurance, which you pay for if you're putting less than 20% down as your down payment, you have to pay that CMHC insurance, which protects the lender, not you. The benefit to you is that it allows you to buy for as minimum as 5% if you can qualify. So it's a tiered system as well. So let me explain how that insurance premium works. For 5 to 9.99% down, you have to pay a 4% CMHC insurance amount. If you're putting 10 to 14.99% down, it's 3.1%. And if you're putting between 15 to 19.99% as your down payment, it's 2.8%. And of course, if it's 20% or more, there is no CMHC that applies. Now let's go back to our original example of buying a home worth $700,000. If you recall, we calculated that the down payment at a minimum would be $45,000. If we put that minimum of $45,000 down, our mortgage amount is $655,000. The CMHC insurance is calculated on your mortgage amount, being $655,000. Because you're putting $45,000 down on $700,000, and that's between 5 to 9.99% of the purchase amount, you'll be paying a 4% premium of CMHC. 4% of $655,000 is $26,200. So should you buy or should you wait? Should you wait until you have 20% or should you buy with less? I recommend we look at your monthly minimum payments. Look at the whole picture. Down payment is just part of the equation, of course. We have to look at all the closing costs to make sure you're ready and able to buy a home. Will you able to buy the home that you want? Again, we need to sit down and look at what's out there, what the budget is, get you pre-qualified, and most importantly, make sure that those monthly minimum payments are comfortable, reasonable, that you can manage, that you've got the job stability to take care of it, that we're not adding too much stress on your shoulders. So there's lots to talk about, and the good news is I'm here to help. I'm your trusted real estate advisor, agent here in Toronto, the Greater Toronto Area. If you have any questions, don't hesitate. Reach out to me. All my contact information is there here on the channel. You can even book a Zoom call right now, right here. So with that, thank you for watching, and I look forward to connecting with you. Don't forget to subscribe to my channel, hit that bell notification, and I wish you a great day.